Hey everyone, and thanks for jumping back into the Equityverse. Today, we're going to talk about Nvidia, and we're going to be discussing its Bollinger Bands. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, we don't typically venture out too far from the cryptoverse. Sometimes we find ourselves in the equityverse or the macroverse, or sometimes even in the precious metal verse, right? But I would like to cover more asset classes beyond just crypto, especially because we know that everything is very cyclical, right? There's this idea that money flows from one asset class to another depending on if you're risk on or risk off, or if there's a lot of liquidity, if there's not a lot of liquidity. So I do want to be a little bit more all-encompassing. Now, recently, Nvidia has had a fairly significant rally to the extent that I think, it's surprised a lot of people. Even people who are bullish on it, I imagine, were somewhat surprised by just how quickly it went up. And you can see that it's currently coming in at around $400. All right now it's around $398.11, but it's more or less around $400. And the high on Nvidia so far, if you look over here on this wick, is currently about 419.38. So that represents at least the local high for Nvidia. Now, predicting when exactly these moves are going to stop are, of course, anyone's guess. Okay, and I'm not really commenting on what it will be able to do, 5 years from now or 10 years from now. But in the short term, we do understand, of course, that this move has been fairly extravagant. And so I wanted to look at the Bollinger Bands to get an idea of how far above, a moving average in terms of how many standard deviations away from moving average has Nvidia gone with this recent move, and then compare that to the context of history. All right. So this is the website Into the Cryptoverse Premium. We of course have stuff for equities as well, and this is the Nvidia Bollinger Bands, right? So if you're not familiar with this indicator, here's a description of it, but it's essentially defined by a set of trend lines plotted usually 2 standard deviations positively and negatively away from a moving average of an asset's price, right? So the idea is you pick a moving average, and then the Bollinger Bands are just sort of it could be 2 standard deviations away from the moving average that you're interested in. So let's suppose that you're interested in a weekly moving average. Let's say you're interested in the 50-week moving average, and you're curious as to how many standard deviations Nvidia is above its 50-week moving average. You can come over here so you can see the Bollinger Band width right now we're setting is 2 standard deviations. And so if the price were to go 2 standard deviations above the 50-week SMA, then that means it's going to a level of 1. Okay, because we've set the standard deviations to be 2. So these green lines here represent 2 standard deviations from the 50-week moving average in both the positive and the negative direction, right? And you can see that there's been periods before where we were above 2 standard deviations, more than 2 standard deviations above the 50-week SMA, and it did not stop the price from continuing to rally. And you can see that this time, we've been above the 2 standard deviations from the 50-week SMA, and the price has continued to rally. But because there has been Nvidia does show a history of going 2 standard deviations above its 50-week moving average, why not plot it 3 standard deviations and see what happens in that case, right? So if you go look at, say, 3 standard deviations away from the 50-week moving average, you'll get something that looks like this, right? And so this does a better job of sort of encapsulating price action for Nvidia for the most part. Now, it doesn't completely, because if you look back at the context of history, the fact that it goes above 1 would be an indication that it has historically gone more than 3 standard deviations above the 50-week moving average. Additionally, it's also gone 3 standard deviations or more below the 50-week moving average, right? You can see it did it in 2004, and then it did it last in 2018. So using the Bollinger Bands and looking at, say, moves away from a longer-term moving average for an asset that you think is going to stand the test of time, it can be useful to understand whether you're getting a good deal or a bad deal, right? if you were to go back and look at periods where the price were, say, 3 standard deviations below the 50-week moving average, like back over here in 2004, the price of Nvidia at the time was around 72 cents. Now, that might sting a little based on the current price today, but again, what it shows you is that it was relatively undervalued. Okay, now again, there are going to be some instances where this doesn't mean a thing. For instance, if a company goes bankrupt, it doesn't really matter, how many standard deviations below a certain price is. I mean, you can always get a reversion to the mean even during the bankruptcy process, but it doesn't mean that it has to ever go back up and put in new highs, right? So we have to remember that. Remember, all these indicators are basically tools that you can use, but of course you also want to have a fundamental understanding of is there a bull case for the asset or is there not? Okay, so again, like in 2004, the Nvidia went 3 standard deviations below its 50-week moving average, and that was a great price. I mean, again, it ultimately was a great price. And then if you go look in 2018, you can see that it went 3 standard deviations below, $35. Now, in the short term, it bounced up and then came back down and then went down all the way to around $32. But again, in the grand scheme of things, when you look at what ultimately happened, right, it didn't really matter, right? Like if you bought it at $35, you bought it at $32, it didn't really matter. Now, in the same way, there are periods where it does go 3 standard deviations above its 50-week SMA, right? Again, looking at the context of history, you can see that it happened in 2003 and in 2011, and then again in 2015, and then again in 2021, and then here again in 2021, and then it's currently doing it again. And so all I want to do is what happened during those times when it was 3 standard deviations above the 50-week moving average, and can we learn anything from it? So one of those times was back over here in 2003. The price of Nvidia was around $2. Okay, and it more or less hugged that level for a month or so, but then it ultimately did sort of slowly fall back in. By August of that year. And you might not think that that's a huge move, but again, the price went from $2 to like $1, right? I mean, that's still a 50% drop, right? It might not, when you look at it on a chart like this, it might not necessarily, seem like a whole lot because, what came after it. But again, at the time, people didn't know that, right? All they knew is it went from $2 all the way down to less than $1, right? $2 down to less than $1. And what's interesting is that it went above the 3 standard deviations away from the 50-week SMA in 2003, and then it was only from June of 2003, and then we went 3 standard deviations below the 50-week moving average by August of 2004. So about a year later. Now, could this happen again? It could. There are indications that the economy is slowing down. We are seeing slowing demand, inflation still high. I do think because of high inflation, it has helped the bottom line of a lot of companies. But as we get into a more disinflationary process, what was a tailwind could quickly become a headwind. And so you could see an example where 14 months from now, when the hype has died down, you could see some type of reversion to the mean. Again, in the short term, who knows, right? Who really knows? But that's what happened at least back in 2003 and 2004. And it went from above 3 standard deviations above the 50-week to 3 standard deviations below. And then we had another example in 2011. And you can see that it didn't actually go back to the 3 standard deviations below the 50-week, but we can at least see what ultimately happened. So you can see that in 2011, the Nvidia price was around 541. And it was more than 3 standard deviations above the 50-week moving average. It then went to 563 and 589. All right, so it still slowly climbed that wall of worry, if you want to call it that, for some time, and it peaked out in February of 2011. Now, by the time you got to August of 2011, the price of Nvidia was back to 269. So again, it might not seem like much when you know what eventually happened, but again, this is a 50% haircut on the price of Nvidia over the course of about half a year or so, approximately 6 months. Okay, so again, it didn't go 3 standard deviations below the 50-week that time, but it did shave off about half of the valuation, and that was in 2011. And then you have other examples you have an example here in 2014 where Nvidia went 3 standard deviations above the 50-week moving average, and it went to a price of around $4.40. Interestingly, in this example, you didn't really see a massive correction, right? Instead, the price of Nvidia just basically went sideways. And by going sideways, it allowed the 50-week moving average to slowly catch up. So it wasn't as extended from the 50-week moving average, not because the price had a severe correction, but because the 50-week caught up to where the price ultimately was. Now, if we just go through an exercise here, right? Like had you sold at 444, you would have had opportunities to get in at a lower valuation, right? I mean, this was February 2014. By October, so about 8 months later or so, the price was at 403, right? So technically, it did shave off about 40, 50 cents or so in that time period, which, I mean, in terms of percentage, right, like that is at least something, right? You're talking about, at least a 10% removal from the price over the course of around 8 months or so. But again, it ultimately just went sideways. And so that was the example from 2014. There's also another example here in let me see if I can find it. So in here, 2015, right? So let's zoom in over here to 2015. And 2015. What you'll see is that Nvidia did get above the 50-week moving average, just like it is now, and it kind of climbed the wall of worry for a while. And then ultimately it did come back down, and it did go below the level that it was once past, right? So again, like this is another example. It's more similar to the one we just looked at in 2011, where the price did fall back in and get closer to the 50-week moving average, and technically it did go lower than where it was when it got above 3 standard deviations from the 50-week, right? So again, it crossed it here at 626. Right, it crossed it here at 626. It continued to slowly go up until around 824, and then eventually it was at 616 about 8 months later. Or no, not 8 months later. Let me see exactly when. So this was from October of 2015 until February 2016. So not even half a year, right? You're talking about just 4 months or so. But it's interesting because in basically all of these scenarios, the price did technically go to a lower level sometime within the next 6 to 12 months. Some of the times it was because a bear market hit for the asset, and it really shaved off 50%. And then other times it was more just a mean reversion where the price stayed kind of constant with a slightly bearish bias for the next 6 to 12 months until the 50-week caught up, and then price action resumed back up to the upside. And then there's, of course, 2 more examples that we can look at, including the one today, and that's back in 2021. Okay, so in 2021, the question is okay, well, after it got 3 standard deviations above its 50-week moving average back in June of 2021, around $200, did it go put in a lower price at some point in the future? And you can see that it did. I mean, it was only a month or two later, about a month later, that it ended up falling back to around 180 or so. And then eventually, of course, it went much lower down to around 112. Then, after it did go lower, right, it fell back in below the 50-week moving or 3 standard deviations from the 50-week moving average. We then saw another move up to the upside, and then, of course, the rest is history, right? From that point, it came down quite a bit. We got, from this level around 333, we basically got a more than 50% correction. It did not go 3 standard deviations below the 50-week moving average, but it still was a fairly significant correction, showing ultimately that every single time that the price of Nvidia reached 3 standard deviations or more from the 50-week moving average, we did eventually see a lower price. Some of the time it was a much lower price, like 50% off, and then other times it was a more modest correction, like 10 to 15% over a longer period of time. So I did just want to go through this exercise just to kind of see where we are. And then right now, as you can see, Nvidia crossed this extent 3 standard deviations from the 50-week at around $380. And since then, it's only continued to really go up, right? So, at 401, if we go take a look at the price right now, you can see it's currently coming in right around that $400 level, okay? What history shows us is that it's possible that it could push higher if it wants to, but history also shows us that at some point, in the next 6 to 12 months, there is a high probability based on that, right? Not financial advice. No one knows what's going to happen, right? No one knows that you would see it fall back in and at least see some reversion to the mean, which would allow the 50-week moving average to catch up. And if you take a look at the 50-week moving average just for some context, this is kind of what it looks like in terms of where Nvidia currently is, right? Like, so this is more or less like an extension from from the 50-week moving average. And you could look at things like extensions from a 20-week moving average as well, right? Another way to visualize this would be to look at, say, take the log of the price over the 20-week moving average and kind of see where it stands in that regard. And if you were to draw a line across the page at this level, you'll see that there were a few times in history where it was this far extended above the 20-week moving average. And, back in 2011, which we talked about, it even went higher than where it is today. And it did in 2003 as well. And if you were to go back to this chart and plot this, say, with respect to the 20-week moving average, you'll see that there are times in history where it was more extended than 3 standard deviations from the 20-week moving average, right? Like, it's not even 3 standard deviations from the 20-week moving average at the current time. If you were to change this to 4 standard deviations from that level, you can see that there was one time in history where it almost reached that, and that was in 2014, when it went up very, very quickly and reached 4 standard deviations from the 20-week moving average. Right now, it's not at that level. It's not at the same extension from the 20-week that it was even at back in November of 2021. Okay, so again, there's different ways that you can look at this. There's different moving averages, of course, that that you can use to look at this, and so on and so forth. So I would encourage you to to look at this stuff. Again, you can get access. You can look at Bollinger Bands on a lot of different websites. But if you want to use this website, of course you can. There's Into the Cryptoverse Premium, and we have it not only for, of course, Nvidia, but a lot of assets. And the cool thing is you can actually look at asset pairs that you might not even think about, right? Like, you could even switch this over to be like Nvidia's valuation against, say, Bitcoin, and think about how crazy that would be to look at, right? But there's really cool things I think you can do with this sort of stuff, and can give you an idea about how money kind of flows from one asset to another, from one asset class to another, depending on if you're risk on, risk off, depending on what the new narrative is based on fundamentals, and just based on people wanting to chase whatever they think the next new narrative is going to be. Anyways, if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.